Hey guys, in today's video, we're going to show you the exact candlestick patterns that we personally use to spot potential trading opportunities in the market. These patterns are simple, powerful, and can help you better understand price action. Don't forget to hit the subscribe button and type 1 below the comment. That way, you'll be the first to know whenever we release a new video because we have a lot of exciting trading content coming soon. We've noticed from your comments that many of you want to learn more about price action trading. So this video is the perfect place to start. Also, let us know what you want to learn next. Comment the number 1 below and tell us which trading topics you'd like us to cover in future videos. First, why is it so important to understand candlesticks? Because every candlestick tells a story about the battle between buyers and sellers. A candle doesn't just show whether the market went up or down. It also shows who was stronger during that period and who was losing control. By looking at the shape of a candle, we can understand the emotions and decisions of traders in the market. However, candles should never be traded alone. The best way to use them is to combine candlestick patterns with important support and resistance levels. So now, let's look at the specific candlestick patterns that we use in our trading. Now, let's talk about one of the most useful candlestick patterns in trading, the long wick candle. A long wick candle is a candle with a shadow that sticks out much further than normal. As a simple rule, the longer the wick, the stronger the rejection. But how do we actually use this candle in trading? First, look to the left side of your chart. You may notice that price previously reached a level and then reversed sharply. This tells us that the area could be an important resistance level. When price comes back to this level again, we don't immediately enter a trade. Instead, we wait for price action to give us more information. What you do is you wait for price action to form at these key levels before deciding what to do. In this example, the market forms a long wick candle rejecting the resistance area. This rejection tells us that buyers tried to push the market higher but failed. Sellers then stepped in and pushed the price back down, creating the long upper wick. If buyers were completely in control, the candle would probably have a large bullish body instead of a long wick. Long wick candles often appear because traders are taking profits at key levels or because large sellers are entering the market. Of course, not every long wick candle leads to a reversal. Sometimes the market creates a false breakout before continuing higher. That's why we never trade a candle by itself. Always combine it with support and resistance and wait for confirmation. Let's look at this level again. If we look to the left side of the chart, we can clearly see that price touched this area twice before, and each time it reacted aggressively and moved higher. This tells us that buyers were defending this zone, making it an important support level. Then as price came back down to this level, we were looking for some form of price action at the level. The first clue was the loss of bearish momentum. We saw a large bearish candle, then a smaller candle, showing that sellers were starting to lose strength. Then we got the confirmation, a candle with a very long lower wick. This means sellers tried to push the market lower, but they failed to keep the price down. Buyers stepped back into the market, pushed the price higher, and the candle closed strongly. Shortly after, price bounced upward exactly as the support suggested. Now let's move on to the second important candlestick pattern, the inside bar. An inside bar is a candle where its entire range, meaning the high and the low, is completely contained within the range of the previous candle. This structure tells us something very important. The market is slowing down and momentum is fading. Now let's look at how we use this in real trading situations. First, we identify the key level on the left side of the chart. In this case, price has reacted from this area multiple times, rejecting it and moving downward. When price comes back to this level again, we start to see reaction from sellers, shown by a wick rejecting higher prices. After that reaction, an inside bar forms right after it. Notice how this candle is smaller and fully contained within the previous candle's range. So what does the inside bar tell us? In terms of price action, it shows that there was momentum loss because price failed to make a higher high. Now let's move on to the third important candle type, which is called the momentum candle. A momentum candle is a candle that has a larger body compared to the previous candles, showing that strong buying or selling pressure is entering the market. So how do we actually use this type of candle in trading? This increase in body size tells us that momentum is building in one clear direction. If you look to the left on the chart, you can see that price previously moved up, touched a key level, and then reversed strongly. This created a clear resistance zone. When price came back to test this same level again, we saw multiple long wick rejection candles forming. Many traders will enter trades immediately when they see these rejection candles, and sometimes that works. However, a more conservative and safer approach is to wait for a bearish momentum candle. This candle shows that sellers are actively entering the market with strong force. That strong participation is what creates the large-bodied candle, confirming that momentum has shifted to the downside. Now let's move on to the fourth candlestick pattern, multiple candle rejections. The name is self-explanatory. Multiple rejections means more than one candle rejecting a key level. So again, we look left and notice price came up, hit, and reversed drastically, giving us a level of key resistance. Later, price comes back to test the same level again. This time, we can see several candles with long upper wicks. Each candle tried to push higher, but sellers stepped in and forced the price back down. In this example, there are 5 rejection candles in total. So let's show this again. We look left and notice price came down, hit and reversed drastically, giving us a clear level of support. If price returns to this level and several candles keep rejecting lower prices with long lower wicks, buyers are defending the area. 5 total rejections, creating strong buying opportunity. So, what does it mean when we see multiple candle rejections at the same level? It tells us that the market has tried again and again to break through an important level, but simply couldn't do it. In this example, sellers pushed the market down 5 different times, trying to break below support. Now let's think about the psychology behind this move. Imagine you are a seller who entered a short trade from higher prices and held your position all the way down to this support area. Once price keeps rejecting the level and cannot move lower, you may start thinking about locking in your profits. Now look at the market from a buyer's perspective. Buyers notice that support is holding and that sellers are struggling to push the price lower. As a result, some buyers begin entering new long positions. And once there are more buyers and sellers in the market, this triggers a reversal. Here is the important part. 2 things are happening at the same time. Sellers are taking profits and buyers are entering the market. Now before we continue, if you want us to make more videos more often, make sure to hit the thumbs up button and type 1 to comment below with your questions and thoughts, as this lets us know you want more videos. Now let's move on to the 5th candlestick pattern, shrinking candles. What we want to see is that the candles become smaller and smaller as price approaches an important support or resistance level. Smaller candles tell us that momentum is slowing down and buyers or sellers are starting to lose strength. In this example, price rallied into resistance and then reversed lower. When price returned to the same resistance level, we saw a large candle followed by a smaller candle and then an even smaller candle. After that, a long wick rejection candle appeared. This was a perfect example of shrinking candles combined with a rejection candle. The market then reversed and moved lower. This brings us to another important pattern, a candle color change. In this case, we had 3 bullish green candles before the first red candle appeared. The first red candle often signals that buyers are losing momentum and sellers are stepping into the market. You have the shrinking candles, a candle color change, and along with candle rejection, which makes this a high-quality short opportunity. This combination is what traders call a candlestick combo. Next, let's learn how to combine these candlestick patterns together into one complete trading strategy. In this section, we put it all together. Just like we showed in the previous video about stacking support and resistance signals, you can do exactly the same thing with candlestick patterns to improve your trade quality. First, look to the left side of the chart. Price moved down, touched a level, and then bounced strongly. When price returned to this support level, several clues appeared one after another. First, the candles started becoming smaller. This showed that the selling momentum was weakening. Second, we saw a long wick candle rejecting the support level. Third, after several red candles, a strong green candle finally appeared. This candle confirmed that buyers had taken control in the short term. Now, let's look at another example. Price moved up, touched a level, and then reversed sharply. This created an important resistance area. So moving on, here's again. Price came up, hit, and reversed drastically, giving us a level of resistance. As price came back up to this level, we had multiple candlestick patterns form. First, we saw a candle with a long upper wick rejecting the level. Second, more rejection candles appeared. Third, we saw an inside bar, followed by another inside bar. Finally, the candle color changed from green to red. This was another clue that sellers were beginning to take control. The same thing happened again when price returned to resistance. First, we had a candle with the wick sticking out, showing a reaction to the level. This was then followed by a candle color change to red after green candles, and then a perfect inside bar candle. As the market continued moving lower, we looked to the left side of the chart and noticed that price had previously been in a strong downtrend. Eventually, a significant reversal occurred from this area, telling us that this could be an important level where buyers and sellers are interested. When price returned to this level again, we started looking for clues from the candlesticks. The first clue was momentum loss. We saw a large candle, followed by a smaller candle, and then an even smaller candle. The second clue was the long wick sticking out from these candles. The third clue was a candle color change. We had two red candles followed by a green candle. This suggests that selling pressure is fading and buyers are starting to step in. The fourth clue was an inside bar. This candle is smaller than the previous candle and often represents a period of consolidation and declining momentum. Many traders may decide to buy right here if they have additional confirmation from lower time frames. However, conservative traders may wait for one more confirmation. The fifth and final clue is the momentum candle. The appearance of this candle increases the probability that the market may move higher. Combining several candlestick patterns with a key support or resistance level is a powerful way to identify high-quality trade setups. But remember, this is only the beginning of price action trading. To become a better trader, you need to continue learning concepts such as multi-time frame analysis, intraday confirmation, market conditions, and many other tools. As we continue to build on price action as a whole, you will be able to narrow down and filter out okay trades versus very high quality trades. If you enjoyed this lesson, hit like and subscribe for more price action content. Comment below, which of these 5 signals do you use the most? Follow Paradise Trading Tips for daily trading education in under 1 minute.